Hello and welcome to Eye on the Money, the television show that gives you insights into how to improve your financial well-being as well as make your money work for you. I'm Ingrid Nantege. Now today on the show we discuss investing in the stock market. Now most people shy away from the idea of investing in the stock market mainly because they don't understand how the market works. Others think trading in shares is only for sophisticated investors. Well, let's make you a sophisticated investor today, and it's a lot simpler than it appears. Joining me on the show to show us how this works is none other than Rufus Kamau, Research and Markets Analyst at Scope Markets Kenya. You're welcome again to the show, Rufus.
Thank you very much, Ingrid.
So today we discuss investing in the stock market, which to a lot of people, it actually does sound like a complex concept.
Well, actually, investing in stock market is very simple. Right now, everything has been simplified. You literally invest the same way you use other applications on your mobile phone or computer.
So you say it's simple and you're going to show us how it's simple. But before we even get into the conversation, we actually talked to the ordinary Kenyan to just pick their mind on what they thought this was. So let's take a quick look before we do this.
Investing in stock exchange is basically you buy shares from a certain company, then you either sell them when the stock worth is more than the money that you bought it with, or you can wait for an year to end, in which case after an year ends, a company pays dividends to its owners. When you buy stocks, you are part of that company. So if you hold on to your stocks, your shares, at the end of the year, a company will pay you dividends. So it's basically you can either do it directly or you go through a stockbroker.
Ni vile unaenda unanunua shares za kampuni fulani, unaekeza ukitumaini kwamba zitapanda juu, alafu utakuja uuze upate dividend. Ama mwisho wa mwaka kuna zile dividend zinakuwa shared. Lakini sasa hiyo imekuwa ngumu kwa sababu hakuna kazi, biashara iko chini, mapato inaenda chini, hizo shares zinaendelea kushuka, hata inaenda chini ya ile ulinunua, inakuwa hasara.
It's basically a market we come in. There's also valuation, devaluation of different counters. And counters here, I mean, of course, the shares. You talk about Kenya and Safaricom. And so I know many Kenyans will look at Safaricom because that's one of the counters that really is actively traded on. But of course, there are many other counters that are really coming up. I mean, I'll throw in there something like Home Africa. I'll throw in there counters such as Sasini. Counters that are not really spoken about. But if you look at the future, of investment in the country, the agriculture counters, the agriculture share, stocks. If you look at the real estate, you mentioned about housing finance and what have you. So if you look at deeper research, there are many ways a Kenyan can invest in the stock exchange.
Ukienda kwa money market, you can do a minimum of 1,000 per month. Sasa inategemea ile pesa umewekeza, ile kiasi ya faida unapata.
There's no way the stock or a share of Amazon can be the same price as for example, let's just say Betin Kenya. There's no way the shares will be at the same price.
It doesn't mean that you need a lot of money to buy shares and all that. Only that you have to be committed. And you say part of money, let's say 5,000 shillings, you are paying every month, like Kenya Airways shares, Safaricom shares. And by the end of the day, when they start giving dividends, you are part of the show and you can get something.
You can buy actually shares for as low as 100 Kenyan shillings. It just depends on the worth of the shares that the company is selling. At which price is this company selling the shares?
Investing in stock exchange, I understand it well, yes, but not very much.
Many people don't have the interest about it because our stock market is really foreign investor led. We have less participation for local investors, and more so we also see a lot of corporates participating other than the mwananchi, as it were.
According to the knowledge I have, there is no limit. It depends on what you have and the stock exchange or the ones where you are investing. How much do you want to gain because it is from 1 share, 2 shares, 3, 2 million, and on. So there is no limit.
Zero, Bob. To be honest, the information is out there. If you go into the NSE website, you can actually get an up-to-date understanding on how it is. Most of the research analysts are willing and ready to take clients through a free course in the hope that they will actually invest with them. So to be honest, you don't need to part with any amount for you to understand how to invest in the stock exchange. Of course, now if you're going in top dollar, and here I mean like you're investing, hundreds of thousands or maybe thousands of money, then you might need to really invest a lot into the education around it. But if it's a start, I'd feel like you don't need to actually get to pay, that is, for education. Because there are websites, we have publication, we have business publications, we have the likes of Metropole TV who are doing a fantastic job in just trying to break down. You look at the news and you look at the ticker down there and you see how the counters are doing. That also drives interest, for potential investors to actually see how they can invest with on the stock exchange.
Trading, I have considered it. Actually, forex trading, I did try it some time ago, but then I got too busy and I didn't continue with it. I've also done investment into stocks, as in I didn't do it directly. I had a friend who told me, bring me a certain amount of money, and after you bring me that amount, every month I will pay you a certain amount of money. And actually it worked out because we were getting paid. Then the corona happened, the corona pandemic occurred, and business was not going that well, so I decided to withdraw my funds.
I bought a few shares when I was working, and it was not, on the side of shares. I bought through Kenya Airways and Safaricom, and that's the only thing I got experience, but I got some few problems there later on, and I sold my shares. So, and I still know I'm not yet over with it. I still go back. But you see, this COVID has really affected everybody. So it is quite hard now to pay for the shares and other things like that.
Yeah, nimefikiria sana. Lakini nikienda kucommit nakuta ile pesa hakuna.
Yes, I have. It's also a way to diversify risk. Of course, I'm a salaried employee, a hardworking Kenyan, I believe. So you always want to diversify your investments, put a bit of money in real estate, put a bit of money in the stock exchange, put a bit of money on the savings. So the stock exchange also provides a very good avenue to actually diversify your portfolio and, having that space where you can say, okay, well, I can cash in or cash out depending on how the weather goes for the agriculture counters and how the economic condition goes or global happenings such as, COVID and, what's happening with us.
If you cannot do it directly and you don't know how to do it, find a reliable company that's these stock brokers are under regulators. Find a company with a good regulator, then invest. It pays well. Investing in stocks pays well.
The issue here is that you have to know, you cannot just go and pay your money to people who are not recognized. You must be very careful with your money, because in Kenya nowadays there's a lot of ships and all that stuff.
So Rufus, you've had the voices from the ordinary Kenyan, now from an expert point of view, to get into the conversation of the day. What would be your definition, your simplified way of trying to explain to me, Ingrid, what does it mean when someone decides they want to invest in the stock market?
When you talk about investing in the stock market, it's literally investing in an existing business and becoming a part owner of that business. So when the business is doing well and making profits, then as a part owner, you get to benefit from those profits. For instance, if you are to buy some, let's say, Safaricom shares, and this is not investment advice, then if the company makes some profits, then a proportion of that profit will be sent to you as a shares earning or even a dividend. So you basically invest in other people's businesses that are already existing compared to, let's say, investing in your own business or any other investment approach.
So going off of that definition, Rufus, then it makes me think that you still need to really think and be sure of that company that you're going to invest in to just make sure you don't lose your money. So the question is, when deciding on what company or when deciding on what stocks should buy, what should inform the decision, or what should you look out for, so that at the end of the day, in the long term, you're like, oh, I took a bet on Safaricom and I lost all my money. How do you make a safe decision, if that's even possible?
Right. So when you're making decision about to invest in this or that company, one key consideration you need to make is that historically stocks go up. So if you look at most of the companies that are trading in the financial markets right now, they have been going up over the past couple of years, or even some very old companies have been trading for 100 years and the stocks keeps going up. So that's one good statistic on your side. So there's always that risk that a company might go down, but most of the companies available in the stock market tend to go up over time. So whenever you are selecting a company, it's always a choice of which company is growing faster than the other. So when you are selecting between two stocks, you are trying to compare the fundamentals, you are trying to look at the company leadership, the business structure, and the general outlook of the entire industry and how it's expected to grow in the next, let's say, 2, 3, 5, or even 10 years. So making a decision to invest in this or that company should be more or less comparative rather than a win or lose situation. Yeah.
Let's now talk about the size of the investment. In fact, that's one of the questions that we took to the street. And if you notice, there were really mixed reactions. Someone said 0 bob, someone said 100 bob. So when it comes to how much money, the bare minimum that one can be required when it comes to investing in the stock market, also considering a lot of people think it's elitist, so you need a lot of money to buy a lot of shares, what would you advise? What is the bare minimum money that you'd need if you wanted to start off? What's the most advisable threshold, and maybe what's the most you can invest?
So when it comes to investing, right now, a lot of things have come up. Traditionally, you'd only be able to invest in the stocks trading in the Nairobi Stock Exchange, but due to the new regulation of local forex brokers, you can actually reach other stocks out there trading in international markets. So different markets will have different minimum investments. So if you go to Kenya, the minimum investment is a certain amount. If you move to a different markets, it's different. However, for most of the products that are available locally, you can literally start with, let's say, 10,000 Kenya shillings. So it really depends on the price of the share. Some shares are very expensive, others are very cheap. So you might find a share that is going for, let's say, 300,000 Kenya shilling, just one share. Another one might be going for just 100 bob, 200 bob, and so on. So depending on the companies that you are looking to own, you can have some different variations. And if you start small, you can build incrementally and then keep compounding your returns. So when it comes to beginning, I don't think there is a limit to entry. So as soon as you have, let's say, 10,000 Kenya shillings, you can start out, buy 1 or 2 shares. Next month, buy 5 or even 10 shares, and then keep on building that portfolio. So when it comes to investing in stock markets, you are better off building a portfolio rather than trying to set aside some money, waiting to get to $1 million so that you can invest in the stock market. You literally start small, and by starting small, you get to benefit from something called dollar cost averaging. So with dollar cost averaging, we know that stock prices tend to change over time. Sometimes they are going down, sometimes they are going up. So by buying in small amounts over different periods, you can average that cost out and find that the average purchase price keeps getting better to you as an investor.
Rufus, in fact, at the top of the conversation, when you were defining what investing in stocks meant, you said it's literally buying into someone else's company. So for someone at home, that can sound very attractive. I mean, because you don't have to bear the cost of setting up your own business, all the challenges that come with that. So someone could actually think this is one of those risk-free ways of doing business. Would you say that's the reality? And what are some of the challenges or risks that come with investing in the stock market that someone maybe should know at the back of their mind even when they're going into this?
So when it comes to investing in stocks, there's certain risks that you're going to be exposed to, just like with any other investment. So one of the risks is that if you invest in a company, the company might not perform well, and in that case, the share price might go down. So if you're investing in a company and it makes losses, then in that case, you might find that the share value is going down. At the same time, there's industry or even market-wide risks, such as the recent case of COVID-19. So if you invest in a company and then a global risk happens, such as COVID-19, which affects the company's operations, in that case, you might experience a loss as the company's share value continues going down due to the global risk. However, in normal market conditions, these are basically cycles. So there are some times when there's bad news in the market, and other times the business is really good. So if you look at companies such as, let's say, Apple, you look at Tesla, Nairobi Business Ventures, they have been experiencing some really good time. If you look at Bamburi, the construction in Kenya, they have been really doing well. So there are those cycles that you might experience. So the good side about investing in stocks, you find that there is what you call dividends. So after a company makes a profit over a period of time, then that a proportion of that profit is shared to you in form of a dividend. So as you build your portfolio higher and higher, and your portfolio keeps getting better and better, then the value of your dividends keep growing. So by deciding to invest in stocks compared to other businesses, you get the benefit of having some passive income. So in this case, you're not actively involved in managing that investment. So it's the company running its own business, and as they make money, then you get profit without getting involved. So this would be really perfect for a person who has another source of income. So if, let's say, you are employed somewhere, you have a salary and you have surplus income, then you can decide to invest that surplus income. So if you are running some business, your business is doing well and you have surplus income, rather than keep that money idly somewhere, not generating further income, you can decide to invest that money in the stock markets. So this way you have some passive income that doesn't involve your resources. Yes.
Right. So Rufus, before we even take a break, I just need to ask, and also this is going off of the fact that you've talked about the volatility and up and down nature of the stock market. For someone who's trying to invest, then what would you advise would be the most ideal time? And I know that sounds very broad, but I mean, I would not want to be someone who, as a first time, I go in at a point when the market is doing really badly. That could put me off forever. So is there such a thing as the best time to invest, and what are some of the indicators that someone should look out for?
Okay, so just like planting a tree, there is a saying that the best time to plant a tree is yesterday or sometime back in the past.
Right.
So if you are looking to invest in the financial markets, let's say buying this or that stock, the best time would have been some time back. However, if you have that option and capability, then you should probably start investing right now. Main reason is that there is different market cycles. There is when prices are up, there is when prices are down. So if you keep building or buying shares bit by bit over a different period, then you realize that your average purchase price keeps getting better. However, in terms of strategy, we normally say you buy when there's blood in the streets. And it's a common saying when you're trading in the financial markets, basically saying that you're buying when the prices are really low. So whenever there is something like bad news in the market, a crash. So recently we saw the beginning of the COVID-19 when stock prices really went down. In that case, the people who entered the market bought at a discount. So whenever there is bad news, usually it creates an opportunity to buy stocks at lower prices.
Thank you so much for that. In fact, I have a question I'm going to pick up when we come back. However, at this point, I'm going to take a very quick break. Don't go anywhere. And remember, you can be a part of this conversation by sending your feedback to our social media handles at Metropole TV K on Facebook, Instagram, and Twitter. We'll be right back.